Good morning, everyone. This is Manoj here from Market Ideas for Profit once again. This is Monday morning, 8:20:30 in the morning, and we're trying to figure out what the markets have in store for us. To give you a short perspective, the GIFT Nifty, which is the benchmark for the Indian markets, gap up, gap down, and we're seeing a massive gap down of about 400 plus points at the moment. Where is it exactly going to start is something that we're going to look at, but this is the morning that we have. We're looking at a gap down open. Now, what I'm trying to do here in this video is I'm going to compare four major charts that tell me what's going to happen, where are we going to see the reversal from. So we're going to look at Nifty, we're going to look at gold, we can look at silver, and we'll look at one index, one ETF in the US, which is the SPY, which comprises of more than 500 major stocks in the US. And we'll take a trend idea from there as to when are we going to see the reversal and how much have we got space to fall further down is the analysis that I'm going to take. I'm going to use a very simple analogy, my 50% rule for this particular activity, and it gives me very good results. It gives me very clear understanding of what the market is doing, and I'm going to use exactly that to try and give you a probable area from where we can reverse. So it gives us an idea where we can start to nibble in the market because we have fallen substantially. The markets never fall in a big way in one go. They generally will take a little bit of a mean reversion at one point of time, but that we have to time it really right because if we time it too early, we have the risk of losing our faith in our reading and the reversal point, and we can not we will may not be able to hold our reversal trades and take stop losses if we don't time it right. So let's try and understand. So I'm going to take you to this chart of the Nifty, and look, we made a swing high of 26,385 somewhere in Feb, very close, and we've fallen drastically from there. This was the midway point at 24,035, which we fell to, and then we fell lower, and when we tried to recover some ground, but as close to that 50% mark, we began to fall again. What tells you here is that we went down, we're looking at again streaming down back to this 21,800, which is the immediate target that I have been looking for some time, and I've been advising that right the moment 24,000 was breached, my first level of profits was at 23,000. We booked up some profits, went higher. We again took some shorts close to this 50% mark, and we've been rewarded because the market has come down on its journey back down to 21,800. So we have this huge 21,800 point that we are looking to go down to, and with today's open, which will be somewhere below 23,000, we will have another 1,000 points to go down to that 21,800 points. So this is clearly telling us, the Nifty is clearly telling us that there's some more downside and that there's a 1,000 point gap down there, which eventually may come. And this is where we could aim for some reversal trades. But for the moment, sell on every rise until we get to 21,800 is the verdict that this chart tells me. Let's look at gold. Well, this is the chart of gold. Again, here we made some highs. We made a swing high at 186. This is the daily chart, stayed there for a very short time. We moved down. See how beautifully that 50% mark is acting as resistance. We tried to breach the 50%, go higher, got a huge rejection. And the moment the rejection was respected, and we moved below that 151,000, 161K mark, we were looking down again towards this 137 level, and we were pretty close to it. 137 is my benchmark. I will try to look for reversal trade at 137. Another 7,000-8,000 points down, and we could then look at a reversal. So here again, what do we see? We see that there's some more room downside. Coincides with what we see on the Nifty. Some more space on the downside, works beautifully and coincides with what I see on the Nifty. Let's go to silver and let's see what silver is giving us, right? So silver, the longer term view is that we should be stretching our marks. We should be dragging this down right up to this level here, which is where I saw the breakout happen. And what are we seeing here again? Let me just remove this from your side to make it a little more easy for you to understand. I'm going to do these markings in front of you so that you know how I mark my levels. So this is the swing high. I'll go here and mark this as swing high. I'll mark this as my swing low, right? The swing low. And what do we need? We need the 50% mark. So we're going to clone this, bring it up, line it up, and then mark it as 50% fib. The next thing is to give it labels on the price tag. So this is what we have. So this is what we have. This is the international silver. I'm not looking at Indian silver. I'm looking at the US dollar silver that trades the market, right? So how beautifully we reached right up high, see the fall. My God, what a fall. We raced back up to tag that 50% level. That was a relief rally that we saw, which has now been lasting for more than a month now. It lasted for like a month and then we began to retreat. See the beauty in that 50% reversal point. Every time it got to that 50%, there was selling pressure. That tells us that there is still selling pressure in the market. Now, there's a live chart because this is an international market. So we are seeing a gap down. We're seeing a move down today. I'm expecting 55, 54, 79, 55 in the coming days. So again, like in gold, like in Nifty, we have some more leg way down that gives us a lot of confluence and gives us a negative trade, a short trade until we breach these swing low levels that are coming on all these three charts. Like, let us look at the final chart, the SPY, which is the US market. Now look at the US market and it gives a little different picture, but yes, that is what we see here. Now in the US markets, this was the bigger scheme of things. This is not actually the swing low, but what I'm trying to see here is I'm capturing the breakout point. So I'm capturing this breakout point here, which I think is a significant move. There's not a swing low, there's a breakout point. If we go to the swing low, it'll be way down here. The swing low is somewhere here, which is not something that I'm looking at this point. This is way beyond our contextual area. But if you really want to look at how the market is, poised to go down on this particular chart, I feel that we have a leeway to go right down here up to this breakout point. So this is 609. We are at about 653, 648, below 650 right now. We have some more leeway down, going down, and I think we will fall in the US too. No major supports on the daily chart here. That tells me that we are going to come down to 609. Again, some more room down on the downside. We probably see a bigger move in the SPY relatively speaking. When we look at the other charts, the Nifty, the gold and the silver charts, the SPY looks that it has got a little more journey to go down. So guys, looking at these four charts, in the real short term, we are looking at some more pain in the markets. So the conscious decision is that though we can start nibbling at 5%, 6%, 10% of our capital, if we have, let ourselves light at the top, there's still more downside expected in the markets. So we should be waiting more, but yeah, you can start nibbling 5%, 10%. We can't be exactly right on what is going to be the bottom. So nibbling at 5%, 10% level is on, but the real nitpicks will start happening when we reach these swing lows. The market is going to fall some more. That's the opinion that I gather after I read these four charts right in front of you. And I hope this gives you a feeler and gives you a plan as to when you should start getting back into the markets if you're already light. If you're not light, and if you still are holding on to your things, look at every rise and start shedding some weight, because you're going to get opportunities at a lower level to get in again. That's it for this video, guys. I hope this helps you. Look forward to seeing you again. Do subscribe to the channel. Look forward to these videos and ring that bell, that notification bell. So whenever I come online with any of these thoughts that I have, take advantage of these thoughts is all I can wish for you to do. Thanks a lot, guys. Look forward to seeing you again. Bye. Goodbye.